With the market falling down every day, the common question that everyone has right now is that is the market headed into a recession, or is this a correction, or is this the Great Depression? So today I'm going to answer this question for you, technically speaking. So the first thing we look at is what exactly is a recession. So a recession is a period of declining economic performance across an entire economy that lasts for several months. Now, since 1980, there has been four such economic recessions that have caused negative consequences on the economy. Now, a correction is a decline of 10% or more in the price of a security from its most recent peak. Now, corrections can happen to bonds, stocks, or indexes. Now, a comparison or an example of this would be between 1980 and 2020, the S&P has seen 17 such corrections. Now, a depression is a deep and long-lasting recession that could last several years. Now, the common and famous depression that we all hear about is the one that happened in the end of 1920. Now, the best way to understand if a market is into a correction, recession, or a depression is to look at the charts technically. Now, the fundamentals are useful and beneficial to say, are the job numbers doing well? Has there a high number of unemployment? But if the technicals say that the market's actually falling and it shows you by just looking at a chart that the market's falling, it is falling. So it's good to have a technical understanding as well as some fundamental knowledge as well along with it to better understand these charts. So the chart that I have in front of me is the S&P 500 futures. And what we're going to look at is, technically speaking, has the market corrected or is there more coming its way? So the way we would do it is by looking at the S&P 500 for the month of Jan 2022. So from the peak that we see of 4,800 all the way down to 4,300, the market in total has corrected more than 10%. So if the definition goes right, this is into a correction period. Now the market did correct all the way down to 4,200 and then bounced back. So it went into a correction and then bounced back off it. Now, another way to look at how is the market performing is to look back at history. So if you look at the March 2020 correction, now the US economy did consider this as a mini recession because it did drop significantly more than the 10% over a period of a couple months. Now, another important point before I forget is which time frames to look at while comparing or analyzing these long-term trends. Now, the way you do it is by looking at monthly charts. The reason I say that is you're looking at either a long-term uptrend or a long-term downtrend, and the way you do it is by analyzing it on a long-term monthly chart, and that gives you a better picture. It takes out all the turbulence or the volatility that could be expected when analyzing daily or 4-hour time frames. So what we have in front of you is, again, a monthly chart to give you a better long-term picture. And the March 2020 that you see on your screen, I'll just zoom into it so you get a better picture of it, is a 2-month downtrend. And it did bounce all the way down to 2,100 and then bounce back up. So it's still early days to tell, is this going to be a similar correction or no? But what we could do is keep in mind a few supporting factors to help us either in a decision to buy or to sell or to hold. So we've analyzed the March 2020 timeframe. Now let's look at the other commercial recession that everyone knows about, was the one that happened in 2008. So as you can see, this was a multi-month and almost more than a year of a recession where there was a significant downtrend all the way to the 700s, and this is really low. And this downtrend that you see that lasted several months was an official recession, and you could tell the trends where the market did try to bounce out of the 50-day moving average. So the purple line that you see on your screen is the 50-day moving average, the yellow is the 20-day moving average, and the grayish line that you see is a 10-day moving average. So that kind of gives you some support and resistances along the way. And the 200-day moving average is recorded as the blue color that you see in your screen. So the market did see a significant decline, but as you can see, it did try to hold its ground on the 50-day moving average. Now, we're nowhere close to analyze and say, oh, is it going to drop down to the 20-day moving line, which seems to be one of the nearest common patterns where we've actually rolled up or rallied up so long. It is possible that we could see a little more of a correction to the yellow line, which is the 20-day moving average. Now, another way to analyze this is to look at the weekly charts. Now, we're looking at a shorter time frame. The market hasn't reacted months to tell you what's going to happen for the rest of the year. But another way you could look at it is by looking at the weekly charts. Now, if you looked at my previous videos that I shared, the 50-day moving line on the weekly time frame is very important. So you've got to keep that in mind and make all the decisions based on this. So if you analyze this, you will notice that the market's still hovering around the 50-day moving average line. So if I was me and if it was to decide, is this going to be just a correction and it bounces back? Should I put all my money into this? I would just wait it out and look at how does the market react to this 50-day moving average line. If the market breaks it and moves further down, I would start shorting the market, because the market's going to then head down either to the 3,400 mark, that's the 200-day moving line that you see here, or if you look at the monthly chart, it's going to head down to the 4,000 mark. So those are two key points to keep in mind. Now, to answer your question, is this a recession, is this a correction, or is this a depression? So right now it does look that it is a correction. It did get confirmed today in early day trading that it was a correction, and it's trying to rebound from there. But the market won't just rebound all the way up. It's just going to be like testing the supports that it's coming across and see, does it actually hold, or is it just going to like bounce back? So stay tuned. There's more to come. Right now, it does seem to look as a correction, and it's either going to hold its line on the 50-day moving average on the weekly time frame, or it's going to drop further. So more updates to come on this in the next couple days and the next couple weeks. So stay tuned to know more on how the market progresses.